Nwizu, a co-managing partner at Comercio Partners, now joins me from Lagos for more on what to expect during this week. Nnamdi, a pleasure to have you join us on Parliament West Africa. Could you very quickly walk us through activities at the secondary market last week?
Hi, afternoon. Also great to be here. So last week we saw yields start to inch up a little bit on the bond side in the market, basically on the back of the fact that the federal government have gotten approval to convert some of the foreign borrowings that they had planned into local borrowings. So basically that means we're going to have more supply of government securities in the market. So markets basically started to pull back on the bond side. Based on that, we didn't see a lot happening on the FG and T-bill side. So that basically didn't really get moved as much. But the focus was more on the bond side, which we saw moving up by about, at the short end, as much as about 50 to 70 basis points. At the long end, we saw moving about 30 to 40 basis points upwards. On the FX side...
Now, Nnamdi, we had a lot of Go on, you were going to speak about activities in the FX space. I'll continue with you from there. Okay,
so in the FX space, liquidity remains pretty thin. You've seen central bank governor recently come out to promise to start to fuel the offshore demand, trying to get an orderly exit for those who want to take out their funds from the market. So we hope to see, or we'd like to see what happens this week based on this new promise that they have done.
So talking about waiting to see what happens this week, I was going to ask you what you made of the nature of interventions that we were seeing from the CBN last week. A couple of headlines from that front. First, talk about the CBN reviewing funding requests by, first of all, local researchers for COVID-19 vaccines. We know where conversations are at with the FX issues. Also, foreign investors, CBN saying there that they are free to repatriate their funds. And CBN also talking about this, all of this will go on, notwithstanding the drag in revenue from crude oil. What do you make of the interplay that we see from the CBN and activities in the secondary market so far?
I think you have to come to the realization that there's a limit to what the central bank can do. It's not a coincidence that as soon as IMF loan of 3.5 billion was approved, and instead when the central bank talking about supplying a bit more liquidity to the market. So naturally, that $3.5 billion coming in will sort of give a boost to the ability of the central bank to sell a bit more dollars to the market. We've seen them continue to do their retail auction, and also they introduced the 100 million intervention, which we'll be selling on a weekly basis. But we're still seeing early windows that last week still inching up to almost about 390 levels. So, and in the power market, we haven't seen that much of an impact yet. We're still seeing rates pretty high in the power market. And at times like this, a lot of people use the power market as some sort of real benchmark, because that is where you have the more or less real demand and supply without any government or official central bank intervention happening. So we still see rates at about 460, 470 in that market. So we haven't seen them coming down significantly yet.
So Nnamdi, as we await April inflation figures in the next few days to come, what are your expectations? Would you say that coronavirus has put paid to Nigeria's ambition of a single-digit inflation?
Definitely, I don't see single digits in the short term. Even if you listen to the interview of the DG of the DMO over the weekend, she had already mentioned the fact that they expect to see a bit of inflationary pressure. So we've seen cost of imported food items going up. Even on the local side, we've also started to see food items also inch up in terms of prices. And then beyond imported food items, basically, Nigeria being an import-dependent economy and wants to start to see effects, the currency start to devalue, then it all feeds in directly into the market. So definitely we intend to see, or we expect to see inflationary pressures continue in the market in the meantime, and single digits definitely won't be a thing for this year.